Hey guys, what's going on? Welcome into the video. So we got a lot to get into this week. First off, the broad market is at a major inflection point we'll be taking a look at. Then we'll be going through some upcoming catalysts that are coming in the next couple weeks, and then some trade ideas for the upcoming week. Let's go ahead and get into it. So starting out, taking a look at the technicals on the S&P 500. Last week it broke below the 50-day moving average, which was a major level to hold, and that we talked about last week. Once it broke below that, it backtested it twice on Wednesday and Friday, but failed to reclaim that level both times. So as long as it's below the 50-day, which is currently around 401 right now, bears are well in control of this current trend, and we should be expecting more downside. Though if it is able to reclaim and close above that level, that is where potential reversal can happen, but this market is now guilty until proven innocent and in sell the bounce mode. So on the downside, it's testing right at trendline support from lows along with strong support zone at 390 to 393. So after last week's move, SPY is pretty extended to the downside. So we could see some more choppy price action in this zone between that 390 key support and 400, along with the 50-day moving average as that key resistance. But once one of those levels are broken, that will give the market the next directional and tradable move, either to the upside or downside. If 390 is broken, look out below with 380 to 382 as the next strong level below, and that it could fall quickly towards if it was to break that 390 level. The market's currently in sell the bounce mode, so that's the most likely scenario as of now, but as we know, this market can change direction very quickly, so be aware of that. Last week, one scenario that we talked about was what happened to the S&P in the bottom of the bear markets in 1974, 1990, and 2011. There's a ton of similarities with those patterns. As you can see with this current pattern at the bottom right of the screen, they all had rounding bottom patterns, a strong rally before a fast pullback that resulted in a higher low before taking off to new highs. For this scenario to play out though, we need to see the S&P form that higher low within the next 2 weeks and start reversing back to the upside for this scenario to be valid. So that is something to keep a close eye on. If we see this falling and retest those lows, that scenario would be out of the picture. Alright, so now talking about a few upcoming catalysts to be aware of. We have the next CPI data release on September 13th, and then the next FOMC Fed meeting on the 20th through the 21st, with Powell speaking on the 21st. So keep these on your radar as these are the biggest market moving events, and taking a look at how did the market reacted after each of these past few CPI reports. It has either ignited large rallies or triggered further legs down. Same with the FOMC meetings, though these leaned more bullish, starting with some major rallies in March, and the most recent one that we saw on July 27th, which triggered the move from 390 all the way up to 430. Depending on how these catalysts go, in that mid-September timeframe, expect some large moves in the market. And we'll be taking a look at these expectations and possible scenarios in the next 2 weeks when these events get ready to happen in the next few weeks' videos. Alright, so now taking a look at a few setups and trade ideas to watch for the week ahead. First up, Shopify, ticker symbol SHOP, which has been consolidating in the same range for 4 months since early May. With setups like this, the longer the consolidation is, the larger that the breakout or breakdown will be when it comes out of it. Watching 29.7 to 30 as key support in the bottom of the range of this consolidation. I'm watching this for a break and hold below that level to enter for either a short or put options play. If it breaks, we'll be looking for downside targets at $28 a share and then 24.5 the next level below. Also with breakdown trade setups like this, you want to limit risk as much as possible. So for example, if this setup started to break down and I entered a short position at 29.5, I would have a tight stop loss and a little bit above $30 per share in case a false breakout rally back up would play out. So it would only be risking about 2 to 3% on the trade with a 15% plus profit potential if it does hit those downside targets. Meta, ticker symbol META, is another trade idea that I'm watching that looks a lot like the Shopify setup. Meta has been consolidating in the same range since early June between $184 resistance and $155 support. This is one that I'd be watching as a play to short or play put options on a break and hold below $155 per share, which would trigger a breakdown from the range and target the zone of 138 to 140 below. This trade idea could also be a trade to play the upside if the market reverses, and this would need to break above trendline resistance, which is that white line, which is currently at about 171, in which the initial upside targets would be 180 to 185 and then 190. This is a name that's going to make a large move soon, whichever direction it picks, so be aware of that. And also is the most attractive long-term value play in the market right now, in my personal opinion. And I would be looking to add size to my long-term position if it was to get near that 140 area of support down below if it was to break down. So next up is Netflix, ticker symbol NFLX. Another one that I'm watching is a play for shorts/put options. After its recent large rally, it's potentially setting up in a head and shoulders topping pattern with 220 as the key neckline support, which is shown well on the hourly chart. I'm watching this one to trade the downside on with a break and hold below the 220 support level, which could then trigger a move lower to the target levels below, initially at 210, 205, and then $200 per share, targeting those levels as the downside targets below. And before we close out the video, keep in mind that we're back to a highly volatile market. So with any trades that you make sure that you're trading with very tight stop losses. Just look at the SPY chart this past week. There's some massive up and down price swings between levels. So be patient, wait for A1 setups, and have tight stop losses in which your reward potential greatly outweighs your risk potential. So that's it for the video, guys. Hope it provided some value to you. If so, make sure to hit the like button and subscribe. Would greatly appreciate that. For anybody interested in joining the private Discord chat, that is the first link down in the description for my personal trade alerts. And I'll catch you all next time. Trade smart this week. Peace out.